Welcome back, everybody. We're diving deep today into Kalyan Jewelers, specifically how they did in Q2 of fiscal year 2025. And to get into all of it, we're going to be looking at two things: their investor presentation and also the statement of their financial results. And I think what makes this one so interesting is that we're not just looking at like a jewelry company. We're looking at a company with over 100 years of family legacy behind it. And get this, they actually started in textiles.
Yeah, it is interesting. You know how they started way back in 1908 with textile mills and retail. And then finally, in 1993, they opened their first Kalyan Jewelers showroom.
So, okay, help me connect the dots here.
Yeah.
How do they make that jump from textiles to selling treasure?
Well, it's really a story of, a family business evolving over generations. So that first generation, they established the textile mill. And then the second generation expands into retail. And then you get to the third generation, led by T.S. Kalyanaraman. And that's when they take the leap into jewelry. And then the fourth generation, Rajesh and Ramesh Kalyanaraman. They took the company public and steered it through all this huge growth.
That's wild. And at one point, I know they also brought in Warburg Pincus as an investor. What kind of message does that send when they bring in someone like that?
I mean, bringing in a global private equity firm like Warburg Pincus,
Yeah.
that's a huge signal. And it's not even just about the money that they're bringing in. It's validation for the company.
Right.
It's saying to the market, hey, a major player believes in the potential of Kalyan Jewelers.
And they've really been trying to, make sure that people see them as a trustworthy and transparent brand, which I imagine is a really big deal when you're in the jewelry industry.
Huge. Absolutely. I mean, in this industry, trust is everything. You think about it in the past in India, buying jewelry, it was a lot of relying on the seller's word. Kalyan Jewelers has completely changed that model. They've done things like embracing the BIS hallmarking, having transparent pricing. You go in there and the price tags are right there on the jewelry. They have product certification. It's like they're saying, look, we're not hiding anything. Here's the proof.
It's a really smart move. I feel like they saw the way the wind was blowing and got ahead of it.
Yeah, I think you're right. They knew that there would be this growing demand for organized retail in the Indian jewelry market, where people are looking for that assurance, looking for the transparency.
And one thing that I think is really interesting about them is their My Kalyan network. It's like they've created this almost hyper-local neighborhood shop feel, even though there's this massive company.
Yeah, the Kalyan network is really innovative. They have 1,022 of these centers all over the place, urban areas, semi-urban areas, even rural areas. And they act as these hubs for marketing and engaging with customers. And it allows them to reach a lot of people who they wouldn't be able to through, traditional retail.
So it's not just marketing, though, right? They're actually trying to build relationships.
Totally. They have dedicated personnel, just for My Kalyan, who go door to door and showcase their products and catalogs. They enroll customers in different purchase schemes, and they even build relationships with people within the wedding ecosystem.
Wow, they're really going all in on that idea of trust. Do you think that hyper-local approach is going to give them an edge over their competitors? Especially, when we're talking about semi-urban and rural markets.
It definitely has that potential. I mean, when you're talking about those markets especially, personal connections are huge. Relationships and word of mouth are so important for people when they're making decisions about what to buy.
It's almost like they've figured out how to make that personal touch scalable.
But it's not just about those areas, though, right? They've also been expanding strategically, across India, especially in markets outside of South India.
You're right. If you look at their strategic priorities, it really highlights their focus on expanding their showrooms. But the way that they're doing it is really interesting. They're minimizing how much of their own capital they have to invest.
That's where their franchise model comes in, right? And I know they specifically have what they call the FOG model. Can you explain that a little bit and tell me why it's worked so well for them? So FO stands for franchise-owned, company operated. It's a really smart way for them to grow super fast. So basically the franchise puts up the money to set up the store, but then Kalyan Jewelers is the one that operates it. So they're making sure that it's consistent with their brand standards.
Okay.
It's a win-win. The franchisee gets the benefit of, the Kalyan Jewelers brand and all their expertise. But then Kalyan Jewelers can expand really quickly without having to take on a ton of debt.
So it's capital light for them.
Exactly. And it's working really well As of Q2 of FY25, they have 105 FO Kalyan showrooms in India. It's crazy because they only just launched this as a pilot in Aurangabad in Q1 FY23.
Wow. And I know they're planning to open another 80 new FOCO showrooms in fiscal year 25. That's a big move. Are there any risks, though, when you're growing that quickly, especially with a franchise model?
Well, one risk is, potentially losing some control over the customer experience. They have to be really careful about who they're choosing as franchise partners. And then they have to really train them well to make sure that they're keeping those brand standards high.
Yeah.
And that they're giving customers the same level of service that they expect from Kalyan Jewelers.
Yeah, that makes sense. So this trade-off between expanding really fast
Yeah.
and being able to maintain control.
Right.
But it seems like they've been doing a pretty good job so far.
They have.
So they're expanding in a really smart way. They're building that trust at all these different levels, and they're figuring out how to tailor their products to different preferences.
Okay.
But let's switch gears for a minute and talk about their performance. What can you tell me about their Q2 FY25 results? Because I'm seeing some pretty strong revenue growth numbers here.
They're good. They had really strong revenue growth in Q2, both in India and the Middle East. In India, their revenue went up 39% year on year, driven by a 23% same-store sales growth.
23%. That's incredible. How does that compare to what everyone else is doing in the industry? Are they beating expectations?
We'd have to look at, the industry benchmarks, but in general, a 23% same-store sales growth, it's suggesting that they're probably outperforming the market. It means that their strategies are really working, resonating with customers and driving those sales in stores that they already had, even before you factor in all the new stores that they're opening.
That's impressive. And what about the Middle East?
The Middle East is doing well, too. Revenue there was up 27% year on year, with a 9% same-store sales growth.
Okay, so growth all over the place. But what's driving that growth? Is it coming from specific regions, or is it specific types of jewelry?
That's a good question. When you really look at the numbers, there are two things that stand out. The first is the growing share of revenue that's coming from places outside of South India. And then the second is the increase in how much studded jewelry is contributing to their overall revenue.
And that makes sense because, they've been focusing on those non-South markets and they've been launching these sub-brands to try to appeal to different types of customers and hit different price points.
Exactly. Non-South India now makes up 49% of the revenue in India, which is up from 46% the year before. And studded jewelry is now 30% of their total revenue, up from 28% last year.
Okay, so it's really clear. They're growing in a smart way. They're focusing on the areas with the most potential, and they're constantly adjusting their products to meet the demands of customers. But I don't want to get too stuck in the brick-and-mortar world because they also have this digital platform, Candor, and they're really trying to create this omni-channel experience for customers.
Candor is huge for them. It's a perfect example of how they're blending the online world and the offline world. Customers can buy things online, and then they can go to a Kalyan jeweler store to pick them up. And they've even started to expand Candor's physical presence, using that FOCO model.
So it's not just a website. It's part of a larger strategy to reach customers wherever they are. How important do you think that is, that omni-channel approach, especially in a world that's becoming increasingly digital?
Crucial. It's essential. Customers these days, they expect a seamless experience. Doesn't matter if they're shopping online or in a store.
Ooh.
Or a combination of the two. Having a good omni-channel strategy, it's not just a nice thing to have. It's something you absolutely need if you want to stay competitive as a retailer. And Kalyan Jewelers gets that.
Yeah, and they had 24 FOCO Candor showrooms by Q2 of fiscal year 25. It seems like they're willing to take risks and adapt, which is probably a good thing in such a fast-moving market. But at the end of the day, it all boils down to the financials. So how are they translating all of this into profits and good returns for their investors?
Their financial performance has been phenomenal. They're seeing really strong profit growth, and they're strategically focused on reducing their debt and giving back to their shareholders.
Give me the rundown. What are the key numbers?
Okay, so in the last 12 months, their profit after tax has been $6,258 million, which is a compound annual growth rate of 45% over the past 4 years, and their return on capital employed, which is also known as ROCE, is currently 19.8%.
Okay, that sounds good. But for those of us who aren't, financial wizards, what does ROCE actually mean?
Oh, of course. So return on capital employed is basically a way to measure how well a company is using its capital to make money. So the higher the ROCE, the better the company is. at taking its investments and turning them into profit.
So 19.8% is good then.
Yeah, generally speaking, yes. It suggests that they're managing their money well and getting a solid return on what they're putting in. But it's always good to compare that number to the industry averages and to how they've been doing in the past.
And what about this commitment to using 40 to 50% of their profits for reducing debt and paying dividends to shareholders? It seems like a bold move, especially for a company that's still in expansion mode.
It's definitely not something you see every day. But it shows, their financial discipline and their commitment to finding that balance between growth and stability. They're focused on what's called deleveraging, which means reducing their debt so that they have a really solid foundation.
So like they're playing it safe.
Yeah,
But it also kind of makes investors feel more confident.
totally. It says, hey, we're not just focused on growing as fast as we can. We want to create value over the long term for our shareholders. And they're putting their money where their mouth is in FY24. They paid out a dividend that was over 20%.
Wow. So they're rewarding shareholders and at the same time they're reducing their debt.
Yep.
That's pretty impressive.
It is. And it's a big part of why Kalyan Jewelers is such a fascinating company to look at. They figured out how to blend traditional values with modern business practices. And so far, it's working really well for them.
It's like they're thinking about the long game.
Exactly. You can see that long-term vision in everything that they do. From how they're choosing to expand to their focus on building a strong brand reputation based on trust and transparency.
So from what we're seeing in these reports, it looks like Kalyan Jewelers is doing a lot of things right.
Yeah, they are. They're blending tradition and modern ideas. They're prioritizing trust and transparency. They're expanding strategically. And they're keeping an eye on their bottom line. It's a really cool story of a family business evolving and thriving in a market that's changing all the time. But their success makes you wonder, if Kalyan Jewelers is setting this new standard for transparency and organized retail, what's going to happen to those more traditional family-run jewelry businesses in India, the ones that maybe don't have the same resources or the same capabilities?
That's a great question. And then you also have to think about the rise of these online platforms like Candere. How's Kalyan Jewelers going to change their hyper-local strategy to keep up with customers who are increasingly, tech-savvy?
Right.
These are definitely some questions that we're going to need to explore further in the next part of our deep dive.
I'm looking forward to it.
It feels like Kalyan Jewelers isn't just, going along with this trend of organized retail. They're actually like leading the charge.
Yeah, I totally agree. They're raising the bar and forcing all the other jewelers to up their game. But, one thing that really jumped out at me when I was looking at these reports was how much they're emphasizing technology. And it's not just about, those carat meters they have in their store.
Oh, yeah, for sure. It feels like they're embracing tech at every level. What were some of the things that stood out to you?
Well, first of all, they're using data analytics to get a better understanding of their customers, which allows them to create, more personalized experiences and target their marketing much more effectively.
So they're using data to improve the customer journey, both online and offline.
Exactly. And they're also using technology to improve their operations, like their enterprise resource planning system, which is basically a fancy way of saying that they have this system that gives them real-time visibility into their inventory, which is super important when you're dealing with a business like this.
Right. Because that way they can adapt quickly if they see that demand for certain products is changing.
Exactly. And don't forget about their Kalyan staff. They've got these mobile apps that help them store customer data and manage leads. It's like each one of those Kalyan centers is its own little digital hub.
It's really interesting how they're combining that personal touch with all this cutting-edge technology. But it's not just about efficiency and marketing, right? Are they also using technology to address some of those bigger challenges? They're specific to the jewelry industry. I'm talking about things like making sure the jewelry is authentic or, ethical sourcing.
You're right on the money. That's a great point. They're really focused on transparency. And that includes their supply chain. They were one of the first companies to adopt BIS hallmarking, even before it was required by law.
Right. And then they have those carat meters. So customers can actually check for themselves that the gold is pure.
Exactly. It's all about transparency. And they're also really open about their sourcing practices. They even published a supplier code of conduct that outlines what they expect from their suppliers in terms of ethical behavior.
It's one thing to say you're ethical, but they're actually taking steps to make sure it's happening.
Right. And that's becoming increasingly important for consumers, especially younger generations, who are a lot more aware of these issues.
Okay, so they're embracing technology, they're expanding strategically, and they're committed to doing things the right way. It seems like they're really hitting all the right notes. But let's zoom out for a minute and think about the context. They're operating in the Indian jewelry market, which is unique in a lot of ways. So
Yeah.
how are they navigating all those cultural nuances and expectations?
That's a key question. The Indian jewelry market is so deeply rooted in tradition and culture. Kalyan Jewelers has managed to strike a balance between honoring those traditions and embracing modern trends. Their jewelry designs appeal to a wide range of tastes, from classic to contemporary.
Yeah, I noticed that when I was looking at their different sub-brands. They have everything from really traditional wedding jewelry to pieces that you could wear every day.
Right, and their marketing reflects that too. They use both national and regional brand ambassadors so they can connect with a broader audience.
It's like they're speaking multiple languages at the same time. The language of tradition, the language of modernity,
Yeah.
and the language of each region they operate in. But the Indian jewelry market is also changing really rapidly. So
Hmm.
what are some of those long-term trends that are shaping the market? And how is Kalyan Jewelers positioned to capitalize on them?
There are a few major shifts happening that are creating both opportunities and challenges for companies like Kalyan Jewelers. The first one is the rise of the digitally savvy consumer. This is a generation that's grown up with the internet. They're comfortable shopping online, researching products, and comparing prices.
So Kalyan Jewelers' omni-channel strategy with candor is right on target.
Absolutely. They're meeting those customers where they are, but it's not just about having a website. It's about creating a seamless experience across all channels, online, in-store, everywhere. And that's why their investments in technology and data analytics are so important.
They're using those tools to create that personalized experience, no matter where the customer journey begins.
Right. And digitally savvy consumers are also demanding more transparency, and they want to see ethical practices, which Calling Jewelers is already addressing.
Yeah, they're definitely ahead of the curve. When it comes to transparency,
But another major trend is this growing demand for personalization. Customers don't want to feel like just another transaction. They want to feel like they're connecting with the brand on a personal level.
that makes sense. People want to feel like they're part of something. But can Kalyan Jewelers, being such a big company, actually deliver that personalized touch?
That's the challenge. But they are finding creative ways to do it. Their My Kalyan network is a great example. They're creating those local connections and offering that one-on-one service.
Right, those local representatives are really building relationships.
Exactly. They're getting to know the customers, understanding what they like, and helping them find the perfect piece. And they're using technology to make those interactions even better.
It's a great example of how they're blending human touch with data-driven insights. Okay, so we've talked about the digitally savvy consumer
Mm.
and the demand for personalization. What else is shaping the market?
Well, we're also seeing the rise of organized retail. More and more people are choosing to shop at branded stores rather than going to those more traditional, unorganized jewelers.
Because they like the transparency and they feel more confident about the quality.
Exactly. But that also means that the organized retail sector is getting more competitive. There are more players entering the market, both from within India and internationally.
So Kelly and Jewelers can't rest on their laurels. They have to keep finding ways to stand out.
Right. It's not enough to just be part of the trend. You have to be the leader.
So they've got competition from other organized retailers. But what about those traditional family-run jewelers? Could they adapt and pose a real threat?
It's definitely possible. Some of those traditional jewelers have really strong ties to their local communities, and they have generations of loyal customers. If they can figure out how to modernize their operations, embrace technology, and build trust and transparency, they could be a force to be reckoned with.
That sounds like it'd be a challenge, though.
It would be. But Kalyan Jewelers is proof that it can be done. They've shown that it's possible to bridge the gap between tradition and modernity. They've set a high standard. And it'll be interesting to see how the rest of the industry responds.
Their journey so far has been pretty amazing. But what about the future? What are some of the things they need to watch out for? What are the potential risks?
Well, no business is perfect, and there are always challenges. One potential challenge for Kalyan Jewelers is maintaining their growth in a market that's getting more and more competitive. As more players enter the organized retail space, it's going to be harder to win those customers.
So they'll have to keep coming up with ways to differentiate themselves, maybe through new products or innovative marketing campaigns, maybe even by expanding into new markets.
Exactly. They have to be agile and adaptable, always changing and evolving their strategies. Another challenge is going to be managing their supply chain. They're committed to ethical sourcing, which is
Yeah.
great, but it also makes things more complex.
Yeah, it takes a lot of work to make sure everything is being done the right way.
For sure. And then there's the whole issue of the global economy, things like fluctuations in gold prices, or changes in currency exchange rates, or even geopolitical instability. All of those things can have a big impact on their business.
It's a reminder that they're not operating in a vacuum.
Right. The Indian jewelry market is connected to the global economy, so they have to be aware of those bigger trends and be prepared for anything.
And speaking of global expansion, we should talk about their success in the Middle East.
Definitely. They're doing really well over there.
How are they approaching that market? Because it's got its own unique challenges and opportunities.
They're sticking with what works. Strategic expansion, adapting to local preferences, targeted marketing campaigns. They're also using their franchise model to grow quickly and efficiently.
So they're taking what they've learned in India and applying it to a new context.
Exactly. And their success in the Middle East makes you wonder, could they expand into other international markets?
It's definitely possible. I could see them moving into Southeast Asia or even North America.
That would be interesting to see. How would they adapt their approach to those very different cultures?
They've shown that they're really good at blending tradition and modernity.
They have.
It all comes down to understanding your customers.
Yeah.
Their journey has been impressive, but it's not over yet.
Nope. The jewelry industry is always evolving, and they're going to have to keep innovating if they want to stay ahead of the game.
After looking at these reports and diving into their strategies, I have to say I'm really impressed with Kalyan Jewelers.
Me too. They're a great example of a company that's innovative, adaptable, and strategic. They're setting a new standard for the industry.
And they've shown that it's possible to be successful while also staying true to your values.
It's not just about the numbers. It's about building trust, empowering your employees, and making a positive impact on the world.
Those are great lessons for any business leader. But we've covered a lot of ground here, and there's still more to explore.
You're right. There are some key aspects of their business model and their financial performance that we haven't even touched on yet.
Yeah, and we still need to dig deeper into the future. What are the challenges and opportunities that lie ahead? So let's take a quick break, and we'll continue our deep dive in the next part of the episode. All right, so we've talked about how Kalyan Jewelers is expanding, all their strategies, their use of technology, their commitment to ethical sourcing. But there's one piece of the puzzle that we haven't really talked about yet. It's something I find really fascinating. Their focus on deleveraging and returning value to their shareholders.
Yeah, it's definitely a bit unusual. You'd think that a company that's growing as fast as they are would want to, plow all their profits right back into the business.
Exactly. But they've made this commitment to use 40 to 50% of their profits for debt reduction and shareholder dividends. It's a pretty bold move. Why do you think they're doing that?
I think it shows that they're really thinking about the long term. They're not just trying to make a quick buck. They want to build a business that's sustainable and resilient, a business that can weather any storm and consistently deliver value to their investors.
It's that long game again.
Exactly. And it's a signal to the market that they're confident. They know they can generate cash flow and they can provide good returns.
Yeah, and that dividend payout of over 20% really proves that they're serious. But they're also really focused on deleveraging. Why is that so important to them?
It all comes down to strengthening their financial foundation. When they reduce their debt, it gives them more flexibility to invest in future growth, and it makes them less vulnerable. If the economy takes a downturn, it's just a smart move. Especially in a market like this that can be so unpredictable.
So they're building stability.
Exactly. They're setting themselves up for success over the long haul.
I think it's a good reminder for all of us that growth isn't always about expanding as fast as you can or acquiring other companies. Sometimes it's about getting your own house in order.
Absolutely. It's about finding that sweet spot between growth and stability.
It makes me wonder, what is their ultimate goal? Do they want to be the #1 jewelry retailer in India? Or are they thinking even bigger, global domination maybe?
It's a good question. I guess we'll have to wait and see. But if their past is any indication, they're not afraid to be ambitious.
They've definitely shaken things up.
They have.
Setting a new standard for the industry. And I'm really curious to see what they do next.
Me too.
So what does all of this mean for you, the listener? Hopefully you've learned a thing or two about the jewelry market in India. Maybe you've even gotten some ideas for your own business or your own life.
Because the lessons we've learned here, they go beyond just, balance sheets and profits. It's about building trust. It's about embracing change. And it's about creating something that's both successful and meaningful.
Kalyan Jewelers has shown us
Yeah,
that it's possible to do well and do good at the same time.
exactly.
And it all starts with understanding your customers, being willing to adapt, and staying true to your values.
Those are principles that anyone can apply.
So, as you go about your day, think about how you can build those strong relationships, how you can embrace new challenges, and how you can create value for yourself and for others.
Don't underestimate the power of innovation or transparency or having a long-term vision.
Thank you for joining us for this deep dive into the world of Kalyan Jewelers.
It's been a pleasure.